Hey guys, Ted the GammaEdge here coming at you with a market recap for May 7th, 2025. Range bound day today. Price action today largely contained within prior day's range. Also oscillated around the opening print today before and after the FOMC stuff that happened in the afternoon. Going through our pre-market prep real quick. This is our newsletter free, by the way. If you want that, just go to our website. First, looking at the market trend model, which is our way of understanding kind of trend and momentum of price and what's happening under the hood of the market. We can see that this week has been mostly a range-bound conditions, meaning, there's really been no impulse from the buyers or the sellers. But keep in mind, net, that the trend is still progressing higher, both on the short-term and the long-term timeframes. Just backing up, if you don't know what the market trend model is, you can go to the curated playlist in the description or comments of this YouTube video. We have a video in there for you. Right. Additionally, we've really seen no net buying or selling via the filter tick, which is our measure of large significant buying and selling. But the TLDR of this is, this is a kind of bullish foundation. However, a bit of in a consolidation phase after the nice ramp that we've had the last couple of weeks. But we really want to see if this is just further consolidation. Ideally, even a little bit of reversion move back to the longer term moving average ribbon and then kind of progressing higher from there. Now going and looking at the SPX options market. Two reasons this is part of our pre-market routine. A, options market is inherently forward-looking, so we can understand how speculators are positioned out in time. And B, SPX, is a large liquid options market, the largest that we can observe. So a lot of good information here. If we can understand this, we can broadly understand the general market. So again, just going through the rounds real quick. This is the SPX-A full complex. Again, SPX has two components, SPX-A, SPX-P, curated list, and the description has a video detailing that as well. But here, call dominated below spot price. We have a bit of a mixed structure above spot price, meaning calls and puts are kind of alternating back and forth. So net, this is a constructive structure, has been cleaned up over the weeks, but we still want to see above spot price continue to shift from put dominated to call dominated. Looking at the SPX-P full complex, same analysis, below spot price, predominantly call dominated. Looking at the distribution of calls and puts to the upside, this is call dominated. However, when looking at the net delta, which is just applying the delta Greek, right, and the measure of risk to the actual open interest, we can see that, there's a lot more puts than what you would expect just looking at this. So this kind of tells us, in the short term, puts are still, in control. In the belly of the option structure above spot price, in the belly, I just kind of refer to closer to at the money. And then the other one, our key transition zone was, 50, 640, 50, 645 on the full complex level. So this is just a key zone to keep in mind as ideally we want to get above 5645, which is more of a call dominated structure on the full complex. Then lastly, going into SPX 0DTE, we just want to look for the key levels here. The pink, we have a legend here for you. Pink, that's just the inspected move implied from the options market. We have the blue, which is our DEX or delta based transition zone. We have our white, which is our GEX or our gamma based transition zone. Then we have the orange, which is our drunken sailor range. Drunken sailor range is based off the distribution and call open interest and put open interest. DEX transition zone here is 5620, 5625. Keep in mind the node up at 5650. And right above 5625, this is more of a call dominated part of the structure. So we would expect sideways to higher price action, all things equal. And then same thing to the downside below 5620. We start to get into a put dominated regime for the 0DT complex. But the whole thought here is above and below the transition zone. If we're still within the drunken sailor zone, price, the influence of the options, market maker influence, all that good stuff is still kind of minimalized. Just given that the net open interest favoring the call side as an example to the upside of the DEX transition zone still isn't that great. So really intraday volume is going to be push around that price a lot more when we're within this zone. So again, these are kind of key goalposts that we want to see price break through one side or the other. Then as we break through that side, we want to see confluence with the market trend model. We want to see confluence with our intraday options analysis, which we'll get to in as well. So again, just recapping, upside levels 5625, 5675, and then to the downside 5620, 5600. And then we also have, other downside levels indicated here, just, prices wanting to get real frisky and make a large outsized move, 5600 to the upside and to the downside 5550. Now that's 5,700 to the upside. Below 5,600, 5,550 would be the first target there, then 5,540. So again, here we have price action today, 5,600 bottom of the drunken sailor range, 5,650. This was the node. This is also just kind of a key half level, and then 5,625 is the top of our DEX transition zone. And as we can see, it's really just a very choppy day. We're never able to really hold the top of the DEX transition zone, which is 5,625. Then just adding some simple I guess indicators for lack of a better term, but we have the blue line, which is just the opening print. We have white, which is VWAP. We have yellow, which is priority VWAP. You can see, VWAPs are very flat on the day. Really, price just oscillated, between our transition zones between opening print. Going to the market trend model real quick too, which is very useful on an intraday basis. We can see that this was very flat. Again, buyers or sellers really didn't have a large impulse higher or lower. Again, very choppy price action. So this tells us A, we're not able to break through any of our key levels, and B, we're really not seeing any aggressiveness from one side or the other. So again, hence, choppy actions or, kind of upside downside moves, those expectations should be tampered. And then go to our intraday volume analysis. I mean, first off, this just kind of looks messy, right? As a quick background, what we do is for the SPX 0DT volume on a 5-minute basis, we aggregate all call and put volume separately, of course. We find the distribution, we find the midpoint of that distribution, which is called a centroid, and we plot that. Every 5 minutes, we plot those centroids for the call side and the put side. We connect the dots. We form these solid green and red, green calls, red put centroid lines throughout the session. What that does is this kind of visual representation of where speculators are transacting in the complex and understanding kind of the sentiment or the behavior of those transactions. So the call centroid, if we're moving sideways like this, really no impulse higher or lower. If we see that the centroid's trending higher, that means calls are getting more aggressive, lower puts are getting more aggressive, and right? Price follows where transactions are occurring. Price follows the centroids. So by doing this helps us understand A, the character of price action, if it's choppy or if it is trending, and then B, we can kind of understand, okay, if from opening to noon, if we can see this is what the behavior of the centroids are doing, then all else equal, we can project out what the path of the centroid is through the close, and that'll update right every 5 minutes as we get new data. And so again, it's helpful to understand where the centroids are going because price follows the centroids. Then, based off your strategy, if you're a trend trader, you can understand if the conditions are choppy or not. And then if, you're a credit seller, you can kind of understand where price is going and where it's likely not to go, which is very helpful as well. So showing how this is actually useful, right? Because we just looked at an end of the day screenshot, but just want to give you a flavor of what this tool is like to use intraday. Here, this is from 12:30, 12:25. We obviously have data from the open to 12:25. So again, what I was saying, there's two ways we can use this. First, right, understanding what the centroids are doing. It's very choppy price action. So again, this tells us character of the market so far today has been very choppy. Then we can project out where those lines of best fit are expected to go, which again, right, we have choppy action, so we expect that chop to continue all else equal. So again, depending on your trading style, this helps you set up what kind of trade you want based off of kind of where we're expecting price to go. So if you're a scalper, that means you're kind of limiting what your upside and downside expectations are, meaning we shouldn't really be expecting a large outside move just given the character of what the centroids are doing. And then if you're a credit seller, it kind of gives you the ranges and the bounds that you should be working within. Then right, obviously we had a news event at 2 o'clock, so price is going to do what it's going to do based off that news event, especially FOMC. But this is just a great tool of saying kind of normal days where we're not seeing that kind of news event. This is how we use it. Then right here is 12:30, which is after kind of no 2:30, sorry. So kind of in the middle of the news event, we can just see how erratic both of those sides are getting, but nonetheless kind of keeping that choppy signature. And we can just see the width and the distribution of those calls and puts transacting within the structure. Generally, as the day progresses, we see this get tighter and tighter, the distribution getting tighter and tighter, but here it's quite wide. So again, that just signals to us, choppy price action, there's really not a direction one way or another. And then this range is quite wide right now. And then right, kind of as we finish the day, right, the centroids really tighten up around price action, but our lines of best fit, which are based off of the centroids themselves, right, they're just linear regressions. Those still kind of tried and true, and price does a good job of playing in the middle of those for the most part. So with that, you should kind of have an understanding of how that tool, not kind of, you should have an understanding of how that tool works, how it's beneficial. And then what we do at the end of each session is we just create a GIF for you based off of all the 5-minute charts that we automatically produce throughout the session. So it's just kind of cool to understand, the relationships between the centroids, the lines of best fit, and just how those kind of move throughout the session. So, right, once that 2 o'clock meeting hits, just kind of looking to see, how that happens, just kind of erratic nature, how those converge into the close. So yeah, with that, looking to tomorrow, obviously we'll get the updated data for specific for 0DT stuff, but, looking at the market trend model, very flat price action right now. So, neither side is super aggressive. From a longer term point of view, we're still improving as the cumulative tick is above the moving average ribbon, so that is constructive to see. But again, from here, if you're bullish, you really want to see this start to get moving again. You want to see filter tick buying come in the market, and then if you're bearish, you obviously want to see this roll over. You want to see filter tick selling like there was yesterday. And then, from an SPX point of view, SPXA, SPXP, those are call dominated for the most part. We want to see that continue to improve again from the bullish side. And if you're bearish, you want to see the puts start to come back in the market. So with that, appreciate the time. Look for us tomorrow pre-market. We'll be putting out key levels, our analysis again, and then obviously the post-market video too. So enjoy your night. We'll talk to you later. Thanks. Bye.